Let's talk about something every Indian family loves to discuss: money, death, insurance. Okay, nobody loves discussing this. But here's what's worse than discussing it: not discussing it. Because most Indian families are one death away from financial collapse. Not the ones who have no insurance, the ones who chose health over term and called it done. You are insured, you feel covered, you probably even told your spouse about it very responsibly until the one risk you did not cover arrives. आपने भी यही चूज किया है क्या? A man, 44 years old, VP sales, Gurugram. Health insurance sorted. Term insurance pending. Always pending, like that gym membership. Saturday morning, cardiac arrest. He never came home. His family covered for every medical bill. For income, nothing. Permanently, irreversibly, nothing. So the question is not whether you have insurance. The question is, if you are not there tomorrow, what does your family actually have? In this video, I will give you a clear framework. One decision based on your age, your dependents, your existing cover. And I will show you a gap most Indian earners never think about. It is called the income replacement gap. Not a complicated matrix, not a 47-step flowchart. 4 steps. Any working adult can follow them. Most don't, but today you will. It is the difference between what health insurance pays and what your family actually needs to survive. One real family, real numbers. Because getting this decision wrong cannot be undone once it happens. Let me explain why most people choose health over term. Health insurance feels real. A hospitalization, a surgery, a claim you can see and feel. You pay the premium, you break your arm, you get 80,000 rupees back, you feel like a financial genius. Term insurance, you pay every year, nothing happens, you feel cheated. Except your family is completely protected. It is the most boring, thankless thing you will ever do correctly. The benefit only appears when you are no longer there to experience it, which, if you think about it, is perfect planning, just terrible marketing. But here is the structural truth. Health insurance protects your savings. Term insurance protects your family's income. These are two completely different risks. One policy cannot cover both. And when budget forces a choice, most people choose the wrong one first. Let me show you exactly how this plays out in 3 specific ways. Gap 1. The income replacement gap. Health insurance pays hospital bills. It does not replace a salary, not 1 rupee. Think of it this way. If your office said, "We will cover your medical bills, but we are stopping your salary," you would not call that a benefit package. You would call it unemployment with paperwork. A 55 lakh annual income stops the day the earner stops. No health policy in India covers this. That gap and its exact rupee cost is what the next section is built around. Gap 2. The insurability window. After 40, cardiac risk, diabetes, hypertension begin to appear. Each finding adds loading or exclusions to your term application. There is no push notification, no reminder that says, "Heads up, blood pressure at 142, term premium just went up." Nothing. The window does not announce itself before it closes. Gap 3. The deferral trap. I will get term after I sort the health cover. This is also what people say about going to the gym, filing their ITR on time, calling their parents more. We know how those end. IRDAI data. Over 80% of Indian households with life insurance hold endowment or ULIP products, not pure term. Deferral is not a plan, it is a risk. Let me tell you about a real client. I will not share his name, but every number I give you is real. 44 years old, VP sales, a manufacturing company in Gurugram. Annual income 55 lakh. Married 16 years, 2 children, son 14, daughter 10. He had a 10 lakh family floater, the one HR had recommended, renewing every year without a second thought. No term insurance. He had been meaning to get it for 3 years. Every time I raised it, he said the same thing. "Ajay bhai, abhi sab theek hai. Health cover to hai. Term baad mein le lenge." He was 41 when he first said it, then 42, then 43. March 2024, Saturday morning. He collapsed during his morning walk. Sudden cardiac arrest. Reached hospital in 12 minutes. Could not be revived. He was 44. No term payout. No income replacement. 55 lakh annual income. Gone that morning. 4 months later, his wife was hospitalized. Gallbladder surgery. The floater paid every rupee. 2.8 lakh. Fully covered. The health insurance worked perfectly. But the income had already been gone for 4 months. 8 months after his death, she came to me. उन्होंने कहा था बाद में ले लेंगे, बाद में आया ही नहीं. Then she asked me one question. अजय, अगर वो उस वक्त मान जाते आपकी बात, तो आज मैं कहाँ होती? That question has no good answer, only a true one. Let me show you the exact numbers. What he had: 10 lakh family floater, premium approximately 18,000 rupees per year. What he should have had: bare minimum 1 crore rupees term cover. Annual premium at his age, approximately 10,000 to 12,000 rupees per year. The difference, 10,000 rupees per year, less than 850 rupees per month. That is 2 coffees every week. That is the gap between 1 crore rupees and nothing. In the 8 months after his death, school fees, home loan EMI, daily expenses, medical follow-up, his wife drew from their savings and PF. The amount drawn down in those 8 months, 22 lakh. From a family that had health insurance, from a man paying 18,000 rupees every year for a floater, a term policy at 10,000 to 12,000 rupees per year would have paid his family 1 crore rupees the day he died. At the current pace, their savings last 3 more years. After that, his son's college, his daughter's school. On what? This is the part most people skip, and it is exactly why they keep making the same mistake. Here is the exact framework. 4 steps. Step 1. Check your dependents first. Spouse, children, parents. That one sibling who says, "Hum to theek hai," but will definitely call if something goes wrong. They count. If anyone depends on your income, term is priority 1, non-negotiable. Step 2. Check your employer health cover. Most companies give rupees 3 to rupees 5 lakh group cover. This is better than nothing. It is also less than 1 hip replacement in a private hospital. But it handles the basics, which matters. If yes, your immediate medical risk is partially addressed. This gives you room to prioritize term first. Step 3. Calculate your minimum term cover. Annual income multiplied by 10. That number is your income replacement floor. Buy term first. Add health cover immediately after. Step 4. If budget allows only one this year, below 35 with dependents, term first, always. Do not buy one perfectly, buy both adequately. Let me show you exactly what delay costs. Term insurance, 1 crore rupees cover. Indicative annual premiums. Age 30, 7,000 to 9,000 rupees per year. Age 35, 10,000 to 13,000 rupees per year. Age 40, 15,000 to 20,000 rupees per year. Age 45, 22,000 to 30,000 rupees per year. Every year of delay, the premium you pay for the rest of your life resets higher. That higher base is permanent. You are not outsmarting the insurance company by waiting. You are funding their growth. Every year of delay is a donation to their balance sheet. After 40, underwriting changes. Not just your age, your ECG, your sugar, your blood pressure. Some findings make term unavailable at any price. हर साल का इंतजार आपकी फैमिली की सुरक्षा और महंगी करती है और कभी-कभी बंद भी हो जाती है. 4 actions. Do all 4. Pause and screenshot this. Not your food. This. Action 1. Find your term policy tonight. Pure term or endowment or ULIP. Only pure term qualifies. Action 2. Calculate your income replacement number today. Annual income multiplied by 10, write it down today. Action 3. Get 2 pure term quotes this week. Claim settlement ratio above 95 to 97% is a strong indicator. But do not rely on this number alone. Action 4. Run both simultaneously. Inadequate cover on both is better than perfect cover on one. And if you have already lost someone and you are managing the finances right now, talk to a qualified advisor. जो हो गया वो नहीं बदला जा सकता. जो आगे है वो अभी भी ठीक हो सकता है. Every video on this channel covers one financial decision that most Indian professionals keep delaying. The next video is no different. It covers something you already know you should address, and it gives you the exact framework to finally act on it. That video is right there. Watch it next. If this video made you realize you do not have term insurance yet, comment below, no term yet. And if you have both term and health sorted, comment both sorted. Share this with one person who has health cover but no term insurance. It could change a decision that cannot be undone. Subscribe to Smart Finances with Ajay. Calm, practical, real life financial clarity. No jargon, no sales pitch, bas sach. बहुत बहुत शुक्रिया. See you next week.